Iraq's 2025 currency reform, a new era for the dinar and the economy. Welcome back to my channel, Iraqi Dinar RV. A major financial development is unfolding in Iraq that could reshape the nation's economic future. The Central Bank of Iraq has officially confirmed that it will implement a new exchange rate policy starting in 2025. This shift marks a departure from the long-standing fixed exchange rate model and introduces a more flexible and market-responsive system. Whether you're an Iraqi citizen, an investor, or simply keeping an eye on global economics, this announcement is a game-changer. For years, the Iraqi dinar's exchange rate was kept at a tightly controlled level, influenced heavily by political agendas and external pressures. This rigidity created various distortions in the economy, including the rise of black market currency exchanges and pricing imbalances. The new policy aims to allow the dinar to reflect actual market dynamics by enabling limited but strategic interventions by the central bank only when necessary. This isn't just about numbers. It's about regaining control. A flexible exchange rate can empower the Iraqi economy to respond more effectively to inflation, trade imbalances, and shifts in global markets. It also signifies a step toward greater financial sovereignty, transparency, and modernization. What's changing and why it matters? The current policy pins the dinar at a set rate against foreign currencies, mostly the US dollar. While that created short-term stability, it also widened the gap between the official rate and what people actually experienced in the marketplace. The black market thrived on that difference, making everyday transactions, especially foreign trade and remittances, less predictable and more costly. Under the new system, the dinar's value will be allowed to fluctuate within a controlled range. This change is meant to bring the official rate closer to the real value determined by supply and demand. The goal is to narrow the disparity between official and market rates, reduce black market activities, and increase transparency in the financial system. This new model could also help stabilize consumer prices. If exchange rates become more responsive and predictable, importing essential goods like food and fuel could become less volatile, making everyday expenses more manageable for Iraqi families. Why now? Timing is everything. So why is Iraq making this move in 2025? According to officials, several factors have aligned to make this a strategic window for reform. Iraq's financial health has improved significantly. Thanks to rising oil revenues, the country's foreign reserves are now among the highest in its history, enough to cover more than 15 months of imports. This strong reserve position gives Iraq a crucial safety net for managing potential short-term volatility. Additionally, the global financial environment is changing. Many nations are moving toward more dynamic currency systems to keep up with fluctuating economic conditions. Iraq risks falling behind if it continues to operate under outdated monetary controls. By adjusting now, it signals confidence in the economy and opens the door to more robust foreign investment. What does this mean for the Iraqi dinar? A big question on everyone's mind is whether the dinar will rise in value as a result of this policy shift. The answer is nuanced. A flexible exchange rate doesn't guarantee immediate appreciation. Instead, it allows the currency to gradually adjust in line with economic performance. If Iraq continues to improve its infrastructure, manufacturing, and oil production while maintaining political stability, the dinar could strengthen over time. However, a flexible system also carries risk. If investor confidence falters or the country experiences renewed instability, the dinar could weaken. The key lies in how well the central bank manages this transition and how closely it monitors the currency to prevent extreme fluctuations. What's certain is that greater flexibility introduces more realistic exchange values. For businesses, this means better pricing and budgeting when importing goods or planning investments. For consumers, it could mean less uncertainty and more purchasing power. Transparency is the new strategy. One of the central themes behind this policy change is transparency. In the past, critics have accused Iraq's financial system of lacking clarity, especially when it came to exchange rate decisions. The central bank has committed to publishing real-time data and market conditions to help businesses, investors, and citizens understand why and how rate adjustments are made. By making the decision-making process more visible, the hope is to reduce reliance on unofficial sources and rebuild trust in the banking sector. This also gives the central bank a better platform for communication, helping educate the public on what's happening and why. How will this impact everyday Iraqis? For the average Iraqi, the move could have far-reaching effects. When exchange rates are more closely aligned with the market, it becomes easier to price goods and services fairly. This means shop owners, importers, and even online sellers will be able to plan better and avoid sudden shocks. Families that receive money from relatives abroad could benefit from fairer exchange rates. Travelers might also find foreign currency more accessible. In short, this could lead to a more integrated, reliable, and practical financial experience for ordinary people. That said, transitions of this scale take time. There may be short-term confusion or volatility as people adjust to the new model. Education campaigns will be essential to help citizens understand what's changing and how to avoid falling prey to rumors or scams. Initial reactions: mixed but promising. So far, financial markets have shown a cautiously optimistic response. While the official rate remains relatively stable, the parallel black market rate has begun to tighten, indicating reduced speculative activity. This suggests early trust in the central bank's direction. Local banks have also started offering more competitive currency exchange services, taking business away from unauthorized exchanges. If this trend continues, it could significantly reduce black market demand over time. The central bank has emphasized that it stands ready to intervene if market movements become excessive. The priority is gradual adaptation, not sharp fluctuations, which could undermine the public's confidence. Global implications and regional influence. On the international stage, this shift could strengthen Iraq's financial standing. A realistic, transparent exchange rate policy demonstrates economic maturity and can attract more long-term foreign investment. Trade partners are more likely to engage with Iraq when the dinar reflects actual market value. There's also the potential for regional influence. Neighboring countries grappling with similar issues may view Iraq's strategy as a model to follow. If successful, Iraq could emerge as a financial leader in the Middle East, showing how disciplined reform can build resilience and trust. Risks and the road ahead. Of course, no reform is risk-free. A more flexible rate opens the door to volatility, especially during times of political or economic uncertainty. Public understanding and trust are also critical. If the government fails to communicate effectively, people may revert to old habits, such as relying on black market rates or hoarding dollars. Additionally, timing is a double-edged sword. Some believe this move is happening during an unstable period, with regional tensions and oil price swings still posing challenges. Others argue that waiting for a perfect time could lead to indefinite delays.